CEOS finding the upside we were looking for per our analysis on Sunday. Let's go over the details of what can happen for the coming sessions. What is up, you guys? Thank you so much for stopping by once again on this fine Monday night. This is ARCa coming at you with a CEOS technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so yes, we are looking at the broadening descending wedge for the CEOS asset on the daily chart. Okay, so we actually did imply that the probabilities, or the higher probabilities, of finding resistance within these two ranges were actually very likely. Okay, so in this case, we are looking at it in the daily chart, but please know that the after hours market price action has not been reflected just yet. So in order for us to take note of that, we'll just go to the 12-hour chart and apply trend line right at that 2250 where we closed after hours. Okay, so now let's go back to the daily so that we can view our play appropriately. Okay, so first of all, now that we have made that 3.618 rejection like we were talking about, we have now ended up at about 0250. Okay, why did we do that? If you remember correctly, per our last video analysis, we talked about the playbook rules regarding the broadening descending wedge. Okay, usually this wedge tends to break out after 3 tests of the resistance on either test number 4 or number 5. Number 4 being the more probabilistic breakout point. In this case, number 4 failed. We faced another capitulation event, and now we are attempting that true breakout on test number 5. Upon this breakout, though, we must be very, very actually, you know what? No, I don't know how to word this. I don't know how to word this in any other way other than you have to understand the playbook rules here. Okay, we break out. The usual thing that we do is come back, retrace, and we test our newly converted resistance, which was this, right? Of the resistance line of the wedge into now a support. Okay, so seeing that the price action is right here on this yellow line, we're more than likely to come back and test first of all the 1.618 at 22 at 2 cents, which is 0227. Right, we can actually find support there, bounce to our current closure, and then actually come right back down to confirm our newly converted resistance into now support. Okay, so there is the probability to where we can actually even test this gap. Okay, but I don't necessarily think that I don't necessarily think that we can actually close this gap just yet, but you never know. Anything can happen in the markets, right? So we're just going to go ahead and make note of our psychological component here and understand that we do have an area of support, first of all, from the gap and our newly converted resistance into support. Okay, so and not only that, we do have the 1.272 at 2 cents, 206 to be very precise. Okay, so that is something that we can expect just by looking at this candle and the price action. It's, you know, this is a very obvious play. We'll come back here, we'll test the support, and then we can move on to the upside if it is that we don't fail the support, right? And then we just continue capitulating, which I don't see to be the case, to be perfectly honest. Okay, so let's go ahead and move to the previous chart in this case, as I actually meant to start with the macro time frame just to get the new viewers in line here. So the reason why I was able to see an immediate upside was not only because of momentum, and it wasn't only because of the price action suggesting so and the broadening descending wedge. I'm talking about all of it collectively, okay, alongside this massive channel that we're riding on the 5-day. Okay, so 5-day, why? Because every single it's 5 days per every candle you're looking at here. Okay, so it takes 5 days for the opening and closing of every candle you see printed thus far. Okay, so now that we're in this macro huge formation, we can actually see that we've literally touched down right at the support of it, supporting every other support touch we've encountered since 2011. So this is a macro scale formation. Okay, I'm talking about we started writing it, let's see, October 12th, 2009. Okay, so if we're able to look back historically, we can actually see the positioning within the trade. So since we actually found a bounce down here at about 1 cent, and we continue to the upside, the likelihood is that it is a viable area of support. Now this doesn't mean that it's just to the moon from here, because please know that this is what we're looking at, the 5-day chart, and let me just give you an idea. Okay, so from the bottom right over here, okay, to the current high where we face today, that's a 46, let me see, that's about a 47% move to the upside in just this tiny little space. Okay, so there's a lot of variance happening here, and it's very wide. Okay, so yes, my overall take profit here is about 5 cents, about 0.546 or 4.7 or 4.5. Why? Because that is the typical trading strategy per the broadening descending wedge. Okay, so usually these wedges tend to realize at the genesis of their formation, which is found right over here at about 5 cents. 0547 to be exact. I want to make sure that the listeners know that I'm not just pointing at things, I'm saying the numbers to be just abundantly clear. Okay, so that is the reason we were able to see the upside. Now, as far as tomorrow's price action, what can happen, right? So let's go ahead and validate those things. First of all, let's jump into the 12-hour chart on the RSI, as I do believe there's some relevant information for us to consider there. Okay, so first of all, we were able to notice the upside again with another point of confluence here, and it was actually that we found 3 drives of regular bullish divergence, which is actually something that happens when momentum is making a higher low and price action is making lower lows. Okay, so in this case, here it is, and that's how we were able to see that the upside was on its way. So here's a little bit of an issue. Okay, I just wanted you to see that. I'm not going to draw all of them, but I want to go ahead and show you what happens. Okay, so from this pivot here that I'm looking at on the RSI, this is the RSI signal, the purple line. The pink line represents a 14-day moving average. Okay, so if you're looking at this pivot, this peak right over here, and you compare it to this peak right over here, you actually take into consideration this. Okay, you take a trend line, you connect it all the way to that pivot from where we currently are now that it's making it, right? And then you notice that it's making a series, it's making a higher low, okay? So, or a lower high. So in this case, we're going to go ahead and draw an iteration here, and you can see that momentum is making a higher high. Okay, so this divergence from going down and this momentum going up, that is signaling a bearish movement. That is called a drive of hidden bearish divergence right over here. Momentum making a higher high, and price action making a higher low. Okay, so that is signaling already a confirmed pivot. And trust me when I say that there are plenty more. Like I said, I'm not going to draw them all, but I just wanted to give you an idea as to how to identify these things. Okay, so if we can find another pivot right over here, you can see that it's right at the top of this hammer candle, and we can connect it right over to the current pivot. And now you can see that the drives of hidden bearish divergence are starting to stack up. I see another one here. I see another one here. There's plenty. Okay, I'm not going to go ahead and draw them, but this is now confirmed. The downside is imminent. We are going to continue to the downside as per expected. Yesterday's video on Sunday explained that we were likely to move up to the targets of the 2.618 or the 3.618, followed by a rejection and then a confirmation before a continuation to the upside, which also was described to you as the more conservative trader will wait upon the confirmation or validation of our newly converted support before gaining entry, and then an immediate upside move. I'm sorry, not immediate, and then an upside swing to potentially the overall take profit of about 547, about 5 cents. Okay, so now let's go ahead and open up a multi-pane so that we can gauge that true edge for the trade. Okay, so this is actually going to be starting with the 30-minute. And here are the divergences. Here are the zones, for the RSI that I would like for you to focus on, as these 4 zones are located right over here as well, okay? So you can see that the immediate short term is suggesting downside continuation. We are now in the bull weakness percentile and suggesting an aggressive downside. We are also below the moving average, which is not good. Another thing here is on the buy hourly, we are still suggested a continuation to the downside. Yes, we do have support from the moving average, but we must notice always the position of your RSI signal. In this case, the RSI signal is sitting in the very, very shallow areas of the bull strength percentile. When we're in this shallow area, we can expect a gravitational pull right back into the prior zone, or the following zone in this case, which would be bull weakness. Okay, we're essentially implying that we're going to fail this support, even though we've been using it for quite some time. But you can see that we can fail it for, quite extensively, and then we can actually recover it. So no problems there. Now, the 6-hour time frame is actually where I'm more focusing my attention to. Okay, so we do have the RSI signal suggesting immediate downside. We also have the signal sitting in the shallow areas of the bull strength percentile, meaning a gravitational pull right back down. So the distance from the RSI signal to the 14-day moving average in relation, knowing that this is a 6-hour time frame and it does take a lot of time for it to reach all the way down to this, we can probably expect a support touch of this moving average. So meaning that the moving average could actually move just like something like this, right? Let me go ahead and make a little bit of a brighter trend line there, because I could barely see that. I don't understand why we can't see it. Anyway, so let's go ahead and just get rid of it any day now. What's going on, guys? Okay. All right. Nice. Very cool, you guys. Apologies for that. Let's just go ahead and load that one more time. Perfect. Okay, so yeah, we can expect something like this, just so you can see what I'm looking at. Okay, I'm gonna make a quick little trend right over here that doesn't look so ridiculous. Okay, and this, what we're essentially implying is that we're gonna make this downside, right, to where the moving average will eventually meet us. And in this case, the RSI signal would then sit at the deep areas of the bull weakness percentile, meaning we're in that gravitational pull, and we're going to use the moving average as support alongside the gravitational pull, and then we can continue our upside. Okay, now since we already saw the 12-hour, it's still obviously it's very bearish. Okay, so we can now go to the daily. So the daily is suggesting some upside. Okay, however, I must express concern that the daily has not reflected the after hours market. I'm sorry, the after hours closing, okay, as it did go down a little bit more. The buy daily and the 3-day and the 5-day, as you can see, are still pitched to the upside. A little bit of resistance there on the 5-day, but that's weekly still facing up, bi-weekly still facing up. Okay, so this is telling us that the downside is limited. Okay, so that downside is very likely for us to find, like I said, potential 1.618 bounce, but very likely we're going to reach down to the 2-cent area. So 0201, and if we do have enough downside thrust and enough stops triggered, we can actually even face the 0190 zone before a bounce, and then finding the resistance from the 1.618, followed by the actual confirmation of our newly converted resistance into support, then an upside. So likely tomorrow, maybe even the beginning of the following day, will be accumulation and will be recovery. Okay, so don't expect any upside just yet. And that is, please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I can't suggest for you to buy or sell any assets, okay? I need you to do your own DD, and everything will be just fine, you guys. So, yeah, if you need to reach out to me, please go ahead and refer to the description below, as the links will be included there for the Discord trading community, ARCa, and also the Twitter, okay? So I know it's taking me a bit of time to reply to everybody, but please be patient, as I will try to get to you as soon as humanly possible, okay, you guys? But with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.